So, good day. It's actually morning over here. It's Sunday, March 13th, 2022. So, I haven't been doing recaps as religiously as I used to, even though I have been trading pretty frequently. Um, I don't get to trade as much as I used to because I'm spending a bit more time taking care of my daughter while her mom's gone back to work. Um, so I'm gonna quickly do a sort of talk about my trades, a general feel. I mean, I haven't got the time to load up NinjaTrader right now. This will cover this day and this day. I have a recap which I have done. I haven't uploaded it, and I think it's for this day. This was not a great day, and a lot of it has to do with how this was going and my whole ethos. But I learned a lot from trading this day in my review, and I'm sure when I uploaded, I probably mentioned that I went long here, then I got out here. Meanwhile, my stop was there, and then I got out here, and then we went up. My target was about here, or probably a bit higher. But there are a few things I've learned. I mean, you have that three push pattern again: one pullback, two pullback, three, and then you expect what to go down or something at this point. Yeah, we went down. So, um, but you see, so yeah, there are one of the things that I learned was it's so important to really consider what is going on here. I've not really over the past few months. I This area has not been easy to regard and understand, but as I have been getting better at reading what is going on, and then also now seeing these retracements, being able to count them better, and this has come with the help of the higher time frame. I'm now able to piece things a lot better. So you can see here we have one pullback, two pullback, three. Um, Even though this looks like it's but it's yeah, you can make a better sense of the story of what's going on here. You have a failed pullback, and the moving average on the 15 is pretty reliable for buying these pullbacks in a weak trend. All right, so if we then now start to go through this, I'll just talk about what I remember because I haven't got my notes here, and I do need to. One thing I do need to do is note down my trades a lot better. I'm not recording them as I should. I'm going to, and a lot of it has to do with the fact that sometimes I enter and I get out and I enter a bit. I never commit to a trade, and I'm realizing that it's not too bad doing that, um, but it's not the most consistent. Anyway, so when I started this day, I had my chart on this, and we had a big gap down. And in fact, I traded the NQ. Do you know what? Would it be easier? Yeah, let's do the NQ. I traded the NQ because I didn't like what I was seeing on the ES. And when I say I didn't like, things weren't looking clean. Like you could see this. This looks so clean. So I traded the NQ. I believe as this bar closed, I took a short. It was a bit early, but I took one position short, and I added and added. I think I had like four MNQs, sorry, not NQ, but MNQ contracts. I don't normally carry that many contracts because this was just racing up. But I had to, I essentially had to hold on to a conviction, which is I'm bearish here. We have a big gap down. This is a pullback. Chances are we're going to go. I did think this could break and go higher, maybe, and fill this gap. But I remember saying to myself, big gap down to the moving average and possibly going lower. Now, there are two things here. This resistance of the moving average, right, is pretty common, this wedge top. There are two different charts that we can look at in this situation, and I'm noticing this now that sometimes whenever we don't have a gap down or I don't know, sometimes things are like now you can see we did this, but it tested this level, right? did not test. This is a moving average, so this is a training range. With this chart as is, I probably will not normally take this. Okay, well, I probably would. It's a wedge top, but um, I just find that with the other chart, things are a lot easier, especially when it's to the moving average. I see it's a test of this, and when I look at this chart now, I see that, you know, we went sideways for a bit, then we now had this wedge bottom, and then it failed. Tried to reverse and failed, so went for a measured move, probably to about there, which is this level. So we're going down. We attempted another reversal over here. That failed. Came down, double bottom. And I remember again, I was talking to my colleague about this. I said, okay, we're rejecting moving average every single time we have a spike, pullback, and channel. 3 pushes down. Maybe this is the third push. We had it here, failed, went down, pull back, 3 pushes down again. I tried to reverse the trend. That failed. But we were successful at closing this bar over here, which was pretty convincing. We've done it quite a few times now, here and here, and maybe this one here. So I think we're going to have a trading range. If anything, we're losing momentum, and maybe on a higher time frame, this is the first low, maybe this is the second low or third low or whatever. But I was convinced that this day was going to be a sideways day because of that. Anyway, we now had this. This looks like a sell climax, and what I mean by that is it's a lot steeper than everything here. So it's almost like we've gone down, try to go sideways. We broke the range here, which is why we have this as the range. Broke it down to the next range, went sideways again. This is the bottom of the range, broke it down, but it's a really steep buy climax and probably the last leg down. Well, anyway, so I took this short here and then added it as we got higher. So I shorted the break of that and then added, and that was the idea. I was now, where was my stop? And that is the question, right? And I kept asking myself that question whilst I was in the trade. Where am I putting my stop? Let's see, style, show. So in a way, it wasn't it was a mental stop. And I said, once we get above the moving average, I'm getting out. Did not and it was a price action stop. But you see, this is the other issue. Above the moving average, how? What number? Do we go a bit above the moving average? And this is where you have to be very, very quick with your decisions and accept your decisions. Because we could go above it, close, and then this bar could come down. And because it's closed, you've gotten out, lost a lot of money, and then your idea has worked. So you have to also add some more conditions. Are you stopping there and then maybe getting out at the high, at the close of this bar? And that whole point is relevant for the next trade that I took. In fact, that trade, I think, was when ES was going up, and then and I'll talk about that it's actually silly because as this was going up on the ES, I was in two minds about the same thing, because I then noticed I saw this range was sideways, and I noticed that we broke out, and then I bought just at this point, at this price. It went up for a bit. I added here, and then it came back down. And as it was coming back down, I think I had a different chart. I had the other chart, and I thought, oh, maybe this is a failed reversal. It might be going down, and I thought maybe this is a double top. It just kept going down, and I was losing a lot of money. Now at this point, I'd already taken a trade on crude oil, which I had done really well in. And in fact, I think I'd already reached the goal that I normally set for myself with crude oil. But I was really tempted to just take another trade, and this wiped out everything. I wasn't very happy with that. So I went back to NQ, and I noticed here on the ES we now had this wedge top, but I did not look at it as a wedge top. I guess you could say that, or you could say that. But anyway, on the NQ, I noticed that we had that wedge top, and I just decided I'm just going to go for it. Here we go. And so I added, and then got out and I realized, okay, my risk is a bit high. Let me take out one contract when we go a bit lower, lock in some profits. Got down here, locked in some more, and then took out 2 more. So I just had 1 more contract, and then got out the last one as this bar was about to close. And I kept saying to myself, the point is, this is a wedge. one, pullback, two. So this really should go down, possibly for a measured move. I should really hold. But in my mind, all I was saying to myself was, well, if we don't want to use that measured move target, we can say this is the measured move target, right? At least here, which is down about here. In my mind, I kept saying, yeah, but you've lost a lot of money doing stupid things. You've reached your goal again. Take this trade and stop for the day. So I got out again. I think it was here or here. I then started playing this game where I started shorting again because we were going lower. Just not really. It was just formal trading at this point and making small. It will go back up and like, come back down. And you see, at that point, I'm thinking this is where my stop's supposed to be. And there's nothing wrong with me putting my stop here. The problem is I've made money. And now I just feel like I'm just going to lose it because I did it before. And that's the lesson here. The lesson is that once you've committed to a trade and you decide to exit, exit. If you decide to enter again, just be aware of the fact that that is your stop. You are now risking a bit more. Yes, you have higher probability you're going down, but you may get pullbacks like that because now you are further away from the moving average, further away from where you started. So you are going to get profit taking. So anyway, this happened. We now had a micro wedge up here, and then had this third, and then four, 1, 2, 3. Of course, this is a good long. I did not take any of this. On the ES, this happened. Was it here? Was it this? No, that was a different day. And then we now had this double, higher. I was now looking at the ES. I didn't take any more trades that day. I just kept watching. If anything, I paper traded. Yeah, I just kept watching this. You now had really nice that, and then I had a breakout. And I have a breakdown of this, which I have posted on Instagram of what was happening and or what not. I need to actually refine this, especially this area, which kind of got me a bit confused. But I was a bit tired when I was doing this breakdown. Yeah. So the next day, now I was watching, and I'm gonna put back extended hours. I was watching price overnight as we were leading up to it, and so I remember saying to colleagues, "As like, this is a wedge top, right?" Yeah, so it's 1, pullback 2, pullback 3. Ugh, I think it was I can't remember. I said the wedge top has failed. We're not going down, so it looks like we may be. I said the wedge top has failed. It looks like we're going up. So I expected, and this was before this buy climax presented itself. I expected this to sort of gradually go higher, and if anything, go up. But I realized I miscounted my legs. This was just one leg. This is the second and third, right? When we now had the buy climax, I did this. And I realized that, we have a bear channel over here. A bull channel. Or maybe it's, I'll just redraw it. Activate. Right, we have a bull channel just about here, or wedge. It doesn't really matter. Anyway, the point is, we have something that's kind of going from here to here to here and possibly to here, if I can see this level here. So that was what was on my mind. I thought, we have a bull channel, and we have a buy climax here. This changes everything. So maybe the wedge is this 1, 2, 3. And this is where this information is so relevant. And what confirms it is when you see the move started here, right? 1, pullback, or maybe this is 1, pullback, 2, pullback, 3. This and this could be regarded as the same level. Or, sorry, the move started here. 1, pullback. Now this all looks like the same level to me. Am I missing something? Let me just go back. Where does it all start? It's not here. It's come back down. This is the base. 1, pull back. This looks like a double bottom, but anyway. One, still the same range, pull back. Two, this is probably the level, but then it never, yeah, this is the level, and then it goes up to three. So maybe this is the wedge, one, two, three. It's a lot easier to see maybe on a higher time frame what is going on. Point is, you have two legs up, one pull back, two, or if you say one pull back, two, or this is one pull back, two. Maybe this is where the move starts, but then I'm using this as resistance. Point is, we have a wedge. One pull back, two, one pull back, two, one pull back, two, one pull back, two. All right, so this is the wedge, and therefore we're now doing the retracement of this one pullback two. I was looking at this and I thought, okay, we have a wedge top, we should start heading down. And then on this, I went on to the 5-minute time frame before the market opened, pulling back, and I was watching how we're selling off. Went sideways for a bit. We had a bit of a triangle here. You can call that a triangle if you like. Come on, click, there we go. Moving average supporting price. I had bear breakout, retest, double top. So it's a two-legged pullback, right? So we now have a break of the pullback. You can see we can go for a measured move down to here, which is here. So we have that break, and this is where things get interesting. So at the open, I was then now looking at this chart. I wish Thinkorswim were a lot quicker at doing this. I was now looking at this chart. So we now had a bull bar, and I had a bit of FOMO saying, do I want to go short? Because I think we're going lower. But as this was printing and printing, I just wasn't sure what to do. I think after the third bar, I went on to the NQ. Sometimes I go onto the NQ to get a good sense of what is going on. I noticed we had like 3 bear bars or 2 bear bars, 1, 2, and maybe at the time I was looking at this was already a bear bar. I was like, ooh, it looks, this is always in shorts. We've already hit the criteria. We've broken we've created a third low. So it looks like we're going down and down strongly. So I now was looking back at ES, and all that was going through my mind is, I said, well, if we are going down, I agree we are going down, but we're here. We should go back up, maybe form a lower high and go down, right? That was what was in my mind. But I did not look at what was really going on, which is spike pullback channel, small channel here. We did, and we broke below the channel. We did not. If we do this, right, 1, 2, and 3. So this was the channel, and we broke. Normally we go sideways and then up, right? Spike pullback channel, sideways we go up. Spike pullback channel, sideways up. But instead we broke below. So this is a strong trend. And I was expecting us to come back up, test this high, and then probably go down, lower high, major trend reversal. As a result, I was struggling to enter this trade. And I said, okay, if I enter short, we made a lower high. This is the moving average. We're still rejecting the moving average. It's a good opportunity to go short below this bar. In fact, I actually wrote this down in my notes, I believe. Yeah, go below. Here is a good short, lower high, double top. Sell at the above the moving. I don't know why I put above the moving average. Anyway, above the moving average, in the point that we're heading to the moving average, and sell and target the measured move, which is this. In hindsight, it's easy to say that, but as of now, I'm looking at this. I'm thinking, yeah, but all this is a small pullback bear trend. So this is pretty strong. If you look at the 15-minute chart, in fact, I can just use this. I've already got this here. This is this bit. On the 15-minute chart, does it look like a breakout? Not really. It's got wicks underneath. So maybe I was right in my analysis. Because we had wicks there, it wasn't easy to take the trade. And when I say not easy, probabilities were very slim. Oh, actually, I missed something here. This is a breakout. Because the open is actually here. This is the open. Oh no. Yeah, this is the open. So this is a breakout. There are no pullbacks, not one. Okay, this is the first pullback in the breakout, which happens before the open. Yeah, it's the first pullback, but everything is very, very strong. So I should only be selling. You probably, any reversal will be very minor. But then once you had a breakout like this, you tend to see like you get this. But this was one, this is what I was waiting for. But it happened a lot later. So I guess on the 5 minute, it wasn't easy for me to take that short. And why? Because if I was going to take that short, my stop will definitely have to be up here or here. Definitely here, because this is the first breakout. And being over here, if I took it short here, and I'm really worried, that would have been quite a big stop. 45 points. 45 points with a one micro is, let's just say 40 points. 40 times 5 is $200 on one contract, which is too wide a stop because the reward from here I would have to hold that contract all the way through the day, and I do want to do that. Yeah, so it was too wide a stop, and I just did not read this as a small pullback bear trend, which was a breakout. Anyway, I was now scalping, and essentially what I now did was, when we now got here, I took a short, put my stop, really tight stop, but very small position, came down here, got out. So I should have probably held longer because the probability is low for the mathematics to work. All right, if we go through the analysis, as you can see, we now have doji underneath the moving average, and this is where this chart is so important, and why I'm now thinking that at the open I need to be looking at this chart too, as opposed to not just looking at this chart. On this chart we have a target, but on the other chart we also have dynamic support and resistance. Let's just move this to where we are. And both charts are pretty important in terms of understanding what's going on. Here you can see we're using the moving average as resistance. So we come down here and we're expecting a reversal, but instead we get a break. So this is a credible sell below this. And as I put in my notes, going for a measured move, which would have been here. As you can see, they took some profits here. This would have been a good trade, just maybe taking that position and then just getting out there. As you can see, we had a double bottom here. This wedge was very tricky to trade because, as you can see, we had, well, this is the first high, this is the first high, second high, third high. At the time, this looked like the first high because this went above that. But it wasn't the signal candle I would use. This is the signal candle I would go long on, and this will be my entry candle. So maybe this is the wedge. Now, because it was so confusing to trade, I did not want to take this leg down. I did enter shorts, but I'd already made my money. I'd already been done for the day. I did enter short here, and then I got out when we got out here, and I wish I had held a bit longer, but I stuck to some rules, which is do not focus too much on your P&L. Just trade. Once you hit your goal, you move on for the day, because it's about the bigger picture, at least for me. What I've been doing in the past is I would come in here, take this trade, short or something, because I'm like, oh, we're short, I'll probably short this, then lose money here, big. And in the past, I've probably do this with a huge contract, lose everything I made here, and then start making stupid decisions and then blow the account. It sounds very stupid, but it's stuff I've done before. And it's now affected my confidence, which is why I'm trying to build more confidence. Now, what was happening here? We were rejecting the 15-minute moving average. So if we go on the 15-minute chart, we will find that every time we came here, we rejected, and then we've come down here, broken out. So it's a two-legged pullback. At the time, I just thought this is a triangle, and it was a triangle, to go back up, because it could be a double bottom, 1 pullback, 2 pullback, 3, and double bottom going higher. But actually, it was just a massive breakout, and we're probably still going lower. So when I was trading, and this is why now looking at the 15-minute is very useful. Not trading it, but looking at it, seeing where we have resistance on there would have also been good. Seeing that we have resistance there would have helped take this trade short, even giving me more confidence. This was also good because the stop was not far at all. It was only about 7 points or 8 points or something like that, which was very, very manageable. This is a good trade. Had I traded, was I trading the whole day, I would have loved to have held this, maybe for at least this scalp down, testing this low. At least, 3 bear bars, we should get a second leg down, so maybe even held, possibly. And then made some more money that day. And I did say to myself, I could probably even do as well as I did the day before, which I did do really, really well. But didn't, I didn't want to do it. Yeah, and that was my trade. And I just started looking at what was going on here. Here we had a very complex, small pullback bear trend. We had a spike, and then this little channel. Now I'm learning how to trade these wedges better. Because I asked this question, how come this did not work? I mean, it did kind of. You had a wedge here, 1 pullback, 2 pullback, 3, right? And then you now had 2 legs up. So this was the wedge, and then you now had a 2-legged pullback here, which ultimately caused price to reverse. Now this is the bit that I'm confused about. You had 2 legs down. Of course, this is a test of the Globex low. Where was it? Here, it's the test of this level. And then we went up because that's where this move started. So if anything, this was the trading range from the Globex. So you could easily have said this level here, and this is the high here, right? So this was our trading range. We went up, and in fact, it was also a measured move. No, that was for the whole day. No, that was a measured move for the day, which was that. So I remember whenever he says you have a big rise like that and it breaks this low, you should go for a measured move down here, which I didn't even think about. I mean, I did after. But, so yeah, it wasn't a measured move anything. I think at the time, was that the measured move target for maybe something down here? But it was close. Something here of sorts. Yeah, I don't know. I need to go and have a look at. Maybe it's actually I see it now. Activate. There. It's not really. Usually it's pretty exact. I don't know. Anyway, so yeah. So we had that. And you see this 2-legged pullback here is the same as this here. How you have this move down 2-legged and then come down. This whole 2-legged thing, 1 pullback 2. Is this whole move down, 2 legs and down. So one needs to also be aware of how on the micro level you see these things. Actually, it's a bit different. This is I've seen this before. It's maybe something like this and this. Yes, this move, one here, and then goes down. Usually a triangle. Sometimes these are final flags to tell you that the trend is coming to an end. So I will not be surprised if we pull back deeply this evening and then maybe come back down. I'm not really sure. Go into a trading range. Mind you, we are looking to come back down for this here because on the 4-hour charts, we would have completed the wedge bottom, which is this 1, 2, and somewhere down here will be 3. We're not there yet. We still have to come down because you can see 1 pullback 2, and this was a rejection of that as well. All right, I think that is the main recap. I think the point of these recaps is less about how I did, but more about what I learned. There's so many. One thing I'm learning about trading now is, at least the way I'm trying to trade so I can be very consistent, is that there are many ways to get into the market, and there are many ways to trade your system. Sometimes you may get in and you've gone long here and it's not worked out. You get out and then don't just jump in FOMO. You just wait for the next trade and take that. There are many reasons why you could go long here and just target. Maybe you see you've gone here, you're like, okay, I'm gonna exit in the next exit of this wick here. I used to think so bad of how I traded because I'm like, oh, it's got to be a measure of my stop, and therefore, if I've gotten long here, definitely got to get out here, because if I get out here, it didn't make sense for me to risk that. But the point, that's not the point. The point is you made money, and you got out when you felt it was time to get out. Yes, it may not be replicable, and you may miss big moves, but you're making decisions based around different things. Your probabilities have changed. I just watched a really good video on that. That things happen, yes, you have expectations of what you want to see, but each bar as a price action trader is relevant to the decisions you're going to make. So the fact that you're expecting good follow through from here. Okay, fair enough. You have this tight channel. The first reversal is going to be minor. Maybe after this is a good signal bar. Even this is even better, much better signal bar, closing on its high. A better bar to go above and go long. But the moment this happens, things have changed. You've had your pullback already, and in fact, this is one pullback, two pullback, three maybe, or hang on, one pullback, two pullback, three. So the wedge started here exactly. So this is the first leg up. It's pullback because it's obviously above that, and yeah, the probabilities are changing because you're getting wicks and tails on top of the bars. It's telling you we're not going to, it's not like these bars that are closing, this one's closing low, this one's going low, so you're getting them closing low, but the ones that are going back up are having wicks on their tails, on their tops. So that is affecting how your probabilities are going to be. So this is probably not going to be a high probability trade. You should expect this. I remember when I used to trade options, I would be trading this and I would be really annoyed because I'd be getting these wicks. Then I would see this, but I would never trade them because I just didn't know how to get in. Now it's the other way around. Once you see this, you should expect this and possibly this. And when you see this, you should expect this. Okay, things are getting a bit dodgy here, probably a triangle forming over here. And then you see this 3 legs down, 1, 2, and then one final 3. This is probably still part of the first, third, second leg. And this is a wedge. It's a spike, pullback, and channel. Now it all makes sense. I remember when I was reading this, it was very difficult. I could not understand what was going on here, but now I see it. This is a spike, pullback, 1, 2, and there's another spike, pullback, and channel. So it's 3 legs down, 1, 2, and 3. So this is the wedge, 1, 2, 3. Now, why is that the case? Al says, and I remember having this in one of the notes, that you should never trade a wedge, expect a wedge reverse when you have a very strong trend. So something like this would tell you this. It's just now becoming clearer and simpler to view. I'm understanding this movement, understanding why this bar is like this and this is like this. You've seen this, and then this is not a surprise. This tells you this may happen. It's worth looking back at all the other charts to get a good sense of what that is about. This is a bit tricky because you have this big leg down, possibly another big leg down, but this was now this big leg, another one of this, because this was such a strong rally up. Yeah, we have some tails at the top, but this first reversal is probably going to be minor, and then we pull back again, and then even more selling. All right, I think that's about it. Oh yeah, and then another thing is I came back to the terminal here, had a lot of FOMO when price was down here. So okay, we have another breakout here. We'll probably break out something, not sure. I put an entry below this bar. Almost wanted to just go short, but I remember saying to myself, if I do go short and this wicks back up, I'll be very upset. But where am I going to put my stop? My stop is probably going to go all the way up here. Am I ready to risk that? How far was that? I think down there, that was what, 17 points. I was just going to enter one contract, and it just went all the way down throughout the whole day. It was such a good trade, and on the NQ it was a bit weaker, it was a bit stronger, but it was just such a good trade. I did this in the paper account, I didn't do this in my account. Didn't like the fact that we had a wick at the bottom. It told me we were getting close to the bottom, but we're not pulling back. Apart from here, there wasn't any other time we pulled back. So if anything, be okay with the stop. I was watching a scalper trade the other day, this morning, and I love the way he would take a trade, he would expect it to go higher, and it failed. He would take the loss and just wait for the next trade, and he will always win on the next one. And sometimes he lost money, but it was his consistency in how he was making money, and I think that's what we want to do. There's nothing wrong in this losing you money because you know there's going to be another one coming up which will make you more money. The way I've been trading, which has been causing me to blow accounts, is I lose the first trade and then I feel the need to make the money back quickly, and then I start losing more money because I'm not using the right stops. So I'm gonna try my best to work to that. I mean, I'm trading a 5 minute chart, which is a lot slower, but I find that the probabilities are a lot higher and it's easier to assess. So maybe on here I can find about, I don't know, 3 or 4 good trades in the day. I maybe just have one bad one, but that's fine. I'm gonna go for really good risk rewards and not trying to um, oversize over trade. And I think once I build up the confidence in doing that and do that consistently, then this would be my thing. And when I say my thing, is that I'm trying to make trading my main source of income. At the moment, it supplements my income, but it's I what's been holding me back is the consistency. Sometimes I have very good days, and then I have one day that just blows it all out, and that's usually because of emotions. I found that the days I have lost the most money have been days when I have oversized, used emotions to get out of a trade, and messed it all up. All right, that's my recap.